Talk about the real-life movie making that is probably going to be in future films. This geopolitical tension that is happening between the Ukraine and Russia. How much of this is going to play into that risk-off sentiment that we're starting to see today, that we saw at the early part of this year, and could emerge once again?
I think it's markets, at least in Asia, already getting used to that, that continued noise in the background, if you will, of geopolitical tensions. We had, I think, in January, early February, we had some wobbles globally as it sort of burst onto the scene. But I think now it's starting to just be sort of background noise. And so markets, I don't think in Asia will really be flustered by that.
You mentioned a couple, actually, Fred. You mentioned the Fed tapering is one of the risks. The Chinese credit issue is a risk. The policy is a risk. And, of course, Japan's April tax rise. So four major risks there. But again, looking at the Chinese credit situation, we can't really know for certain how bad it is. That's lack of transparency. But how worried are you as an economist about it?
Well, we think it's manageable in aggregate, so that China has excess savings and still owns the banks. So a Lehman moment seems unlikely in the country, but that doesn't mean that Chinese policymakers don't want to set a marker by having perhaps some more credit stress, some risk pricing come back into the system. And so the next few months, you might actually see more of that hit the headlines, which doesn't mean a collapse of the Chinese financial system, but I think it will continue to be on investors' minds, at least right through the second quarter.
Well, Tim, what do you think? I mean, in sense of what do you think are the big collision points for China?
Well, I think one of those big issues is just going to be how do we see the government deal with the local debt? How does that play through? We were talking earlier today about the upcoming NPC and initiatives that come out of that. One of those elements is opening up the financial markets to local governments to be able to better and more sustainably finance and transition that risk into potentially an opportunity. But I'm curious with you, how were you all thinking of that specific risk as it relates to the Chinese municipalities and provincial debt issue?
Well, I think for the municipalities, it is government debt at the end of the day. So that's why a broad default in that sector seems unlikely. There's a lot you can do with credit guarantees, using the China Development Bank, Beijing offering credit guarantees. So there is a rollover risk here, but I think ultimately, to the extent that these loans are used for infrastructure investments, I'm not too worried about that for the time being. What would potentially be a bigger risk is if the real estate market starts to soften, because a lot of the loans are collateralized through real estate. Now, prices are cooling, they haven't collapsed, but that could potentially be a bigger headache for policymakers.
Right. This weekend really highlighted the differences between the civilians' agenda in China and the politicians' agenda in China. What do you expect us to hear from the NPC as it pertains to some of these more social issues?
Well, the whole bag of social issues, but I think one that has become more and more prominent in recent months or years is people are upset about environmental pollution, air pollution, water pollution, etc. And the government has increasingly been responsive to these demands. Now, it's a tough balancing act between economic growth and trying to reduce pollution, but I think at the end of the day, the NPC will look at this issue. You're going to see some more forceful statements about environmentally sustainable growth in order to address at least that part of frustrations.
And it's pretty interesting on that front. We've clearly seen the electric utilities, and those in particular that are more oriented towards renewable and clean energy technologies to produce electricity, behave quite nicely over the course of the last 3 to 6 months as the plenum came through in anticipation of further policy initiatives. So the market's certainly starting to anticipate some of that.
And we heard this month from Li Ka-shing, who's apparently richer than most people had calculated this past 10 years, but he's making a bet in that space. We featured one of his Horizons Venture fund companies called Nanoleaf, and they're taking a look at the new light bulb that could emit 100 watts of energy using just 12 watts of actual power. How much do you think these kind of innovations are going to be integral to sector plays?
Well, I'll take it in a bit of a broader context. Technology is a really intriguing place in China. And historically, it was because it was cheap to produce it and then export it elsewhere. The intriguing part about China now, which is all part of the consumer domestic growth idea, is you produce it as well as consume it. And, you know, whether it's environmentally oriented technologies or whether it's more traditional consumer-oriented technologies, it's, again, quite interesting looking at stock performance, looking at revenue growth, looking at earnings growth. You know, we're seeing this with domestic Chinese technology stocks and companies, you know, quite notably.